So now we got the stock market, right? We just ran through this. We just ran through the crypto. Now let's go to the stock market, right? The stock market is a marketplace where buyers and sellers trade ownership stakes in publicly listed companies. When a company grows, so does your investment. Simple as that, right? Simple as that. You end up buying into, you're getting a piece of ownership, getting some shares in the company, and as it grows and moves up to the upside, say the stock's 100, like SpaceX, 150 right now, and as it grows as a company and gets to 300, you benefit and get that. So stocks, that's the ownership. Buying a share means you own a small piece of that company, right? We just talked about that. Apple, Meta, Google, Nike, doesn't matter. You own a small piece of those companies. The indexes. So you got the S&P 500, which is what we talk about every week. That's the SPY. That's the S&P 500. And that's the top 500 U.S. companies. Then you have the NASDAQ 100. We talked about that last week, actually. We ended up going through all these different indexes and explaining the benefits, the pros, the cons, and the origination of each index last week. So go ahead and refer to last week's Twitch Live or the YouTube to get that. But you have NASDAQ, the NASDAQ 100, the top 100 tech-driven companies, and it's an ETF and index based off of the tech. And Dow Jones, the 30 large industrial companies, right? That's the Dow Jones Industrial, right? And the longest standing out of all these three is the Dow Jones. This has been around the longest, right? If you want to get the exact dates, once again, refer to the video. So you got bull versus bear market, right? So this is where the terms get very specific. So when we say bull market or you hear bullish, that means prices are rising. Hence, a bull likes to strike upward, right? That's where it comes from. Then you hear bear market, right? If you hear bearish or we're in a bear market, that is meaning prices are falling. We're going red, right? And hence a bear strikes down. So a bull market, bear market, prices are falling 20% or more. 10% is what we call a correction. But when you get to prices falling 20% or more, that is you're definitely in bearish market, bearish territory. Why it matters. Historically, the S&P 500 returns 10% per year, and that outpaces inflation and savings accounts, right? So when it comes down to inflation, right, one thing may be costing, we know that last 5 years, something that costed $100 is now $115, $120, right? Whatever the exact numbers may be. And that's inflation. And when it comes down to your bank account and a savings account, I like to use the shoebox analogy, right? If inflation is rising and the dollar is losing its value, and say you've kept $1,000 and you're saving in a shoebox, because that's equivalent to a savings account. It's basically just like having a shoebox because it's not doing anything. The banks give you no return on your money less than 1%. So if your money is sitting somewhere and it's not growing, shoebox, savings account, your closet, whatever, and inflation is rising, your dollar is losing value, right? So your $100 doesn't have the same power that it would 5 years ago, right? But if you invested and say you put money into the S&P 500 and say you consistently invest every year, and you just leave it there, each year your money will be growing with the S&P 500 and it will be outpacing inflation. Now you get even deeper and you go into cryptos, you go into knowing how to pick your own individual stocks and buying certain companies. That 10% per year, you can get to that being 20%, 50%, whatever it is. You can get it to just be much higher based off the skill of learning how to read the stock market and the crypto market.
Yeah. No.
The platforms you need to know. So I'll start and do the I'll start with the Robinhood. Well, all these you can do crypto on them as well. So Robinhood, right? Commission-free stock and ETF trading. You go ahead and look it up on the App Store. I love Robinhood. I love SoFi as well. These are actually the two that I use when it comes down to investing into stocks and crypto, honestly. I got crypto into Robinhood. SoFi, you can invest into crypto as well. I haven't bought any SoFi through crypto, but I have a checking account through SoFi. I got an option account through SoFi, and I invest into stocks through SoFi. So if you go to the App Store and you end up looking up Robinhood and SoFi, these are all-in-one financial platforms, right? You know, Robinhood started off as just a investment platform, but ventured into banking, savings, just banking in general. SoFi started off as just a banking, ventured into being a brokerage as well, and having you have the ability to invest, right? So those are the two platforms that I use to invest. And when it comes down to these two platforms, I'll let Flash take over.
Coinbase, primarily crypto, where you can. This was one of the first exchanges where you could get and purchase crypto on your phone legally. It's not like illegal, right? So you can. This is the most the most trusted U.S. crypto exchange where you could buy Bitcoin, you could buy Ethereum, and you could buy a lot of the altcoins that they have on their platform. Not all of the altcoins, but a lot of them. And the interface is extremely beginner friendly. It's very easy to use. A lot of people say that it's one of the easiest interfaces to use because it's so simple. Now, just like Fisher Go Getter said, you could buy crypto on both of these platforms, but this one is primarily crypto. You cannot. Actually, they just added to the point where you can trade perpetuals on Coinbase, but that is kind of advanced. But you can also trade crypto on Coinbase. Now, TradingView is where you would go and look at all of the asset classes, from stocks, from the cryptos to commodities to metals to industrial stuff, everything, anything that you would want to invest in is on TradingView. This is where the charts is, and this is where you would go in and make your analysis, your technical analysis, and see where you're getting in is good, where you will be dollar cost averaging. The go-to, the charting tool for reading supply and demand zones, support and resistance, and technical analysis.
This is TradingView.
This is TradingView.
You guys see us use this every single week. This is TradingView.
I will emphasize. You're good. Before you even look into any of these places, TradingView should be the first place and app and website that you go and utilize, because you want to know what you're getting into and look at the fundamentals of the fundamentals actually, and do your analysis on those assets first. So before you even look into any of the stocks, any of the cryptos, you need to look and see what they look like on the chart before you try to indulge. TradingView is your best friend. There's nobody more realer, no truer than TradingView.
Reading the market. So you got TradingView 101. So we just went over TradingView, and like Flash said, emphasizing looking at what you're investing, right? Before you even get to a point where you are buying a stock, get comfortable looking at the stocks, right? Get comfortable being able to know how to track your stocks, get in your cryptos, right? Because TradingView is your place, right? You can do that within the apps that they give you, but for that in-depth research and the people who want to take it a step further, TradingView is the way you want to go, right? So candlestick charts. I'm gonna start right here, or I'm gonna do candlestick and support and resistance, and you can touch on the supply and time frames. So candlestick charts. Each candle, one time period of price action, right? Each candle equals one time period of price action. A green equals price went up, red equals price went down, right? Each candle, one time period of price action. That's going to be done in the time frames, but depending on what time frame you're in, you got the daily time frame. Each candle represents a day. You got the weekly time frame. Each candle represents a week. You got the 1 hour time frame. Each candle represents an hour, all the way down to 15, 5 minute, 1 minute, 30 minute, all these different time frames, and you can see exactly how price is moving at that specific time frame, right? And then you got support and resistance. This is what I love and what I use every week. This is what I use every single day and night to look at the stock market, right? This is the strategy that I use. You got support, where price is the floor, where buyers step in, right? And then you got the resistance equals the ceiling, where sellers take over. So price support is what I like to say is where we're failing to get below. Once again, if you got price at $652 and you got support at $650, and then you have resistance at $655. Can you see? Can you make sure we can see the whiteboard on the brother? If I do this,
no, you can. You got to move back though.
Just got to move back a little bit. So let's say this is just real quick. 655 is resistance.
Why don't you use the chart?
Just a different, you know. 655 is resistance. And let's say 652 is the price that we're at, right? We're failing to get above 655. That's the resistance. We're at 652. We're failing to get below 650. So now price is in this box, right? And this puts us in a box. So now when we get to 655, I'm looking to see whether or not we break above it or we reject. Or when we get to 650, I'm looking to see whether or not we bounce off again and get below it, or bounce off again and go back up to the upside, or get below it. But until price breaks out of either of one of these prices, price is just stuck in a box. And that's how we gauge where price is at. And that's why I love looking at support and resistance, because you can put price in a box, you can gauge where it may be going to, and you can gauge where it may be going to next, and then make your moves based off of that. So that's it.
Bang. Now we're getting into the supply and demand zones. This is how you are able to really get in where you would like. Now, you can you utilize the support and resistance to analyze where you see price is. And now supply and demand zones is where you actually get in and say either place that trade or that investment opportunity. So this is pretty much what they are, is the areas of heavy buying or heavy selling. And it says go-getter's primary tool for identifying accumulation entries.
That's the full circle wealth way. We both be using supply and demand zones.
Getting in there where we see there is a lot of just a lot of activity ultimately, right? A lot of movement into price ultimately.
Yeah, it's reaction zones, right?
Right.
You can look at support and resistance and supply and demand zones as where like reaction zones. When it comes down to looking at price and candlesticks, you want to see where this price is reacted from. I'm gonna let you finish it off.
Oh yeah, that's pretty much it. You also had touched on time frames pretty well. I'm gonna just read it though. Weekly and daily charts for long-term investing, just like you said, the 4 hour for the 4 hour and the 1 hour for active entries. And you start from the what we call this top-down analysis, where you start from the very top, which is the weekly time frame, and you make your way all the way down to the 5 minute or the 1 minute to get more accurate details of where you want to put in that investment or that trade. So yeah. You want to touch on anything?
Nah, that's just reading the market 101.
Bang. I can do this one.
ETFs and dollar cost averaging, man. So